One of the most popular sections of our Finweek magazine is the House View section. This is where Finweek contributors get to make their stock picks and give some ideas on what they're putting into their portfolios. One of the questions we often get asked when we go out is, give us a share tip. Now obviously everybody's looking for those 10, 15, 20 cent shares that are going to go to R1.50, R2, R3. Those 10 baggers, they're hard to come by. What you're really looking for is a blue chip. So what we're going to be looking at today is Grindrod. Grindrod is primarily a shipping and logistics company that has gradually evolved into an industrial conglomerate over the last couple of years. One thing about Grindrod, it's been able to evolve from a mid-tier shipping company into a genuine industrial conglomerate. It's been able to go from shipping, financial services, where it now runs a bank, it has an asset management business, it operates ports in Maputo, and it's been able to give you a footprint across the globe. One of the most exciting developments at Grindrod was the announcement that Remgro was going to become a significant shareholder in it. This has been able to give it new capital, the ability to interact with other Remgro assets, and has simply been able to give it the gravitas that it lacked before as a mid-tier shipping company. One of the things that often gets asked about Grindrod is what's happening with the share price. It's gone from 12 Rand a share up to 26 Rand. It's now floating somewhere between 24 and 26 Rand a share. People are saying best years behind it. We don't think so. One of the things about Grindrod is that it's got big assets. It's going to grow in the coming years. And I think that what you're going to find is that a lot of the investment will drive some of the earnings that are coming through. One of the asset managers recently featured it in the Pro Pick section of the magazine, and he's identified it as a 30 Rand share, and that means that there's genuine upside from its current levels. Trading on a price to earnings multiple of 20 times sounds a little bit expensive. Dividend yield of 1.4 doesn't sound all that attractive, but what you've got to remember about Grindrod, it's a growing company. It's growing its earnings, it's growing its capacity. It simply has the opportunity to get big across the rest of Africa. It might not be the most exciting share in the near term, but I promise you this is going to be a big share in the long term.